Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on this episode, I'm thrilled to welcome in Mario Innecco to the program. A veteran of the industry who worked for major financial institutions in London for over 20 years and is currently the host of the Innecco 64 YouTube channel, the home of alternative economics and contrarian views. We discuss why standing for delivery is kryptonite to the bullion banks shorting gold and silver to manipulate prices. One notable billionaire bought and took delivery of over 12 million ounces of silver earlier this year. Could more big money be lined up to take possession of physical metals, and how could that impact the price? We also discuss the new gold exchange starting in St. Petersburg this year and why the Russian government sees through the Western paper charade and could play a major role in true price discovery. We're also going to talk about the big beautiful bill, Trump's latest round of tariff threats, the great taking in the UK, and so much more. Commodity Culture has merch. Get your hat, hoodie, t-shirt, or mug, all backed by a 100% quality guarantee by using the link in the description below. And now, my friends, strap yourselves in for my conversation with Mario Innecco. Mario Innecco, great to have you back on Commodity Culture. I want to start the conversation off with the current state of price manipulation in the silver and gold markets. We've spoken before about the fact that the bullion banks shorting the metals don't have the same level of control over prices, perhaps, as they did in the past. What is the latest data that you're watching when it comes to shenanigans in the futures market? And is this game continuing to unwind in your view?
Yeah, I worked in the futures market for 20 years, mostly trading government bond futures and interest rates. And I did follow gold futures and silver futures quite closely once I started buying gold in '02. Uh, but I don't follow the data very closely. A lot of people do, and sometimes I look at what people say. But one thing that seems to be happening that I think is quite important is that the supply the of physical silver in the COMEX warehouses is dwindling, and it's at record lows. I think 155 million ounces. And what you need to understand is that the COMEX itself doesn't have like a warehouse. They just have they just say, oh, this warehouse owned by JP Morgan or whoever, that is qualifies as a COMEX warehouse. So I think that's an important aspect of things. And I've noticed as well, I don't know how it's developing right now, but that open interest in gold futures is dropping a lot. Open interest means that the higher the open interest, the more the public is involved in the market. So it looks like people are not getting as involved. So yeah, and I've seen recently as well that the SLV, which is the ETFs for silver, uh, I think it was last week and today as well, you can't borrow shares from the SLV. And why would you want to do that? Well, I think the bullion banks, they did that with PSLV a few months ago, if you remember. If you remember it, they were borrowing the shares to sell the SLV to keep the net holdings of SLV like neutral, because there are a lot of people buying PSLV, excuse me, and the trust had to buy physical. So if the swap dealers or bullion banks were able to borrow PSLV and sell it, it neutralized that increase, so they didn't have to buy physical. So they're trying now, I think, with the SLV, but the problem is they can't borrow. The lease rates for SLV shares has gone through the roof. And I think that squeeze in silver is going to continue. And today, as we speak, gold is tested 3,400 again in the spot, and we're close to 39 again as well in spot silver.
And now a quick break to hear from our sponsor, ARC Silver Gold. Osmium owner Ian Everard is considered one of the most honest and level-headed gold and silver dealers in the United States, praised even by his competitors. So give him a call today to take advantage of the specials right now. Silver Kangaroos 2023 1 ounce coins, mint fresh, only $2.47 over spot. Mint fresh silver maple leafs 2025 coins, 1 ounce, $2.87 over spot. While supplies last. Reach out today at 307 264 9441 or by email at ian@arcsgo.com and make sure to tell him that Commodity Culture sent you. And now, back to the interview. Yeah, and silver obviously performing very well recently, and some interesting notes that you give there regarding the SLV, the increase in the rate on lending out shares. I did not know that. I was talking with Andy Schechtman recently, and he pointed out that standing for delivery is the kryptonite that can break all of this apart. Now, interesting to note, I actually didn't know this for some reason because it was a pretty big announcement made on X, I believe on March 31st. Billionaire founder of Entrata, David Bateman, purchased around 1.5% of annual global silver supply, over 12 million ounces. Do you think we'll start to see more moves like this? Wealthy individuals, institutional funds deploying big capital into the physical space and actually standing for delivery? And if so, what could be the implications?
Yeah, I mean, I follow that guy on X. I've communicated with him, and yes, I'm sure others will follow. I think he was the founder of a tech company and did really well, and he sold his shares or the company. So yeah, I think that would be yeah, that will happen, I think. And back in the 70s and 80s, the Hunt brothers were the main guys who went into physical silver. They started actually buying futures in the early 70s and taking delivery in the early 70s. And I suspect it's because when Nixon closed the gold window in 71, they knew what was coming in terms of inflation, but they couldn't buy gold, so they started with silver. But then they got over their heads a little bit, and the regulators and the Fed came after them. But when you have dozens of small, not small, of course, they're billionaires, but dozens of people with a lot of wealth, and maybe half of them start buying silver like that, it could make a huge difference. And I agree with Andy Schechtman. I've been telling people ever since I started following gold when I bought my first Krugerrands in '02. I noticed that the markets behaved in a funny fashion, like they did the same thing at, at a certain time every day, which is unusual for markets. And then I discovered GATA, Gold Antitrust Action Committee, and Bill Murphy, and that's one of the things he said. Physical, you need physical, you need to take delivery, but on these exchanges like COMEX, uh, yeah, unless you're a big fish, they're not gonna like make it easy for you to take delivery. I think 2 or 3 years ago, Rafi Faber with a few other guys tried to take a delivery of one contract of silver, which is 5,000 ounce bar, and they made it so hard they had to give up in the end. So yeah, it's definitely the kryptonite taking delivery, and I think it was one of the reasons why they created because the bankers are behind these ETFs. They created the gold ETF. I think it was '04, if I'm not mistaken, and they created SLV as well because that yeah, that basically makes people not go for physical because people want convenience and they don't want the hassle of buying. For some reason, people are think it's a hassle to buy physical gold and silver, which I think is crazy, but that's what it does. And I saw that today on X, someone came out that a company in Japan called Tanaka Precious Metals, they had a program where you could buy physical silver, I think, and keep it in their vaults. And now they're saying that as of December or like when the program ends, you're going to get your cash settlement, not physical. So it's really difficult to trust all these ETFs and things like that. But in terms of manipulation, you're saying about the manipulation of gold and silver. Some people might say, well, if they've been manipulating it, how come the price is going so much higher? And my retort, or my answer to that, is that they try to keep the public scared of going into gold and silver, because sometimes they come in and they smash the price, and they create a lot of volatility. And I don't know if you've seen this, Jesse. Back in the 70s, there was communication between the London bullion dealers and the US Treasury, and also the State Department, about the coming legalization of gold on January 1st, 1975. And one of the dealers in London said, yes, the creation of a futures market should help uh, keep Americans away from hoarding physical gold, because it's going to create a lot of volatility, and the futures market is going to dwarf the physical market. So that's how they do it. But yeah, I think people are waking up to the fact that the only real way to own gold and silver is to buy the real thing. And I think the billionaire there, Mr. Bateman, is an example of that.
You pointed out on your channel recently that Japanese government bonds and silver are pointing to a major financial upheaval. Break down what you're seeing there for us.
Yeah, silver, I guess the reason why I said that is because the last time, two times, well, the only two times silver went to around $50, back in the late 70s, early 80s, we saw almost a breakdown of the dollar system. We saw the US Treasury issuing bonds in Deutschmark and Swiss francs. They were called the Carter bonds. So that was like I think a signal that things weren't well, and silver, having been the money of the masses for thousands of years, reflected that. And the same thing, I guess, in 2011, we saw the European sovereign debt crisis in the countries of the south of the EU, like Portugal, Italy, Ireland, Greece, and Spain. I know Ireland is not in the south, but it was kind of in the same fiscal situation. And silver that year, when that crisis started, 2011, went to 50. So that's why I mentioned silver. The JGB market, that's the Japanese government bond. I've been covering it for years on my channel, that eventually all the debt and liquidity created by the Bank of Japan, and all the debt that's been taken by the government there, is going to come home to roost. Uh, we've been told by the Keynesians and mainstream economists that Japan has always been in a danger of deflation. But in the last 12 months, I think rice prices went up 100%. So the public, they're starting to feel the pinch. They know that deflation is really not there. And by deflation, I mean falling prices. I know that deflation is the collapse of the money supply, but um, things get confused a little bit. But now, uh, in Japan, the long-term yields for JGBs are spiking massively, and they could spike even more starting this week, because we had an election this past weekend in Japan, and the government lost its majority in the upper house, and that's quite serious, because the opposition, they want more fiscal stimulus, they want more tax cuts, and the Ministry of Finance and the Bank of Japan, they're trying to rein in all the this money printing and liquidity. So this is throwing a spanner in the works. It could spook investors, and JGB yields could rise even further, and that weakness and drop in JGB prices could spread uh, to treasuries and other government bonds like the gilts and the European government bonds. So that's why I think it's very important to keep an eye on silver and Japan.
I want to move over to Russia now and talk about the St. Petersburg exchange in Moscow being set to begin trading physical gold stored at Goznak, the state mint. This year, I think by the end of the year, they're planning it. Here's a quote from St. Petersburg Exchange President Igor Artemyev. He says, I am confident the cooperation between the St. Petersburg Exchange and Goznak will give new momentum to the development of exchange trading of precious metals and increase the volume of trading with them. So this has caused obviously a lot of speculation online that St. Petersburg Exchange will become a competitor to Western exchanges like the LBMA and could lead to a major move in the gold price. What are your thoughts on this development?
Yeah, and Moscow also has an international gold exchange. So this is just an additional exchange in Russia. And I read something about this new exchange in St. Petersburg, and the Russians, they know what's going on because they say London controls the market now, even though the UK doesn't produce any gold. And the reason they can control it is because uh, sovereign countries are daft, or I don't want to say, or stupid enough to leave all their gold with the Bank of England. That's how they do it. And basically, the Russians are saying, we're not going to leave our gold with the UK, and we produce the most gold. We're going to have our own market. And I think that's going to chip away even more at the paper games on LBMA and COMEX, because COMEX and LBMA are kind of linked. They're attached at the hip, I would say, and their objectives is not really to have a physical market that functions for physical delivery. Yes, sometimes big actors take delivery in London, but for us, the public is just supposed to be something, to speculate on. But I think the Russians, they're more serious about having a real physical market. And yes, this is just going to continue to chip away at the West's, and especially London's control of the uh, price finding mechanism. And Shanghai, they're doing the same thing. Shanghai Gold Exchange, they're opening also depositories elsewhere. So yeah, I think the trend is for more and more real physical gold and silver trading. And I think the Russians are very much aware of the paper game. And why do I say that? Well, because there was a, a, a summit, I think it was in the Yukon 2005, organized by GATA, and they had like a economic advisor to President Putin who went there, and he found out about all the bullion bank paper game in gold and silver, especially as it pertains to J.P. Morgan and the bullion banks. So I think the Russians are aware of this, and so are the Chinese, and they know that the Achilles heel of the Anglo-American empire is the fact that they've kept their currencies inflated, and like they've kept the perception that they have value by suppressing gold and silver. So yeah, it's interesting times, and I think they might even open other exchanges. Who knows?
Well, according to diplomatic genius Lindsey Graham, none of that will matter because they're about to unleash a sanctions package on Russia that will finally, once and for all, cripple their economy. I believe the EU is passing their 18th sanctions package on Russia. It is pretty amazing to watch unfold in real time. Now, Trump telling Putin, you better come to a ceasefire agreement within 50 days or we're coming at you economically, kind of a sharp turn from when he was trying to buddy up with Putin. He seems to go back and forth on who he's siding with. What are your thoughts on these continued tariffs, just piling tariff upon tariff? And now Trump is talking about 15 to 20% tariff on all EU goods. More tariffs for Canada, China, 50% tariff on Brazil for some reason. The list goes on. He also threatened a new 100% tariff on BRICS member nations and 100% tariff on any countries daring to import Russian oil. I mean, what is going on here? What are the implications of this if it's all ever fully implemented? Because Trump also likes to go back and forth and then say we've come to an agreement, take the tariffs off the table, put them back on the table. What's going on here in your view?
Well, I think it just creates a lot of uncertainty. And I've said this in the past. The reason why the US is running such huge trade and current account deficits is not because other countries want to rip them off. It's because America is running on a credit bubble, and it has been doing that virtually ever since Nixon closed the gold window. They've had the exorbitant privilege to just print dollars out of thin air, while the rest of the world has had to earn dollars and work for it. So, but I don't think it's going to get any better, Jesse, because I don't see Trump or Bessent talking about reining in the Fed, uh, maybe abolishing the Fed and bringing back sound money and allowing the free market to basically iron out all these credit booms and busts, because that's what happened in the 19th century. And overall, the U.S. had like a balanced trade because there were no central banks from 1835 to 1913. But as I said, it looks like now Besson and whoever's going to be nominated as the next Fed chairman, they want to join up with the Treasury and pump things up even more. I mean, we're supposed to be in a great economy in the US, but they still want to cut rates down to one. It doesn't make sense. So that's how I see tariffs. They're just a distraction. They're not going to solve anything. I think the only way this problem is going to be solved is through a major collapse of everything, and then people will have to sober up and and not just Americans here in the UK as well. We run big trade and current account deficits. Not maybe not as big as the US, but yeah, we'll have to sober up. We'll have to start working and producing and earning our keep in the world. And that's how I see it. As for the sanctions, they haven't really worked that well, have they? All the sanctions against Russia or other countries. All it's done is made them even more determined to create an alternative to the G7 or to the West. And I saw that Trump said that there's a small group called BRICS. It's falling apart. I mean, he's in total denial, I think. And BRICS now is 45% of the world's population. It's growing, 40% of GDP, and I'm not defending BRICS nor the West. I'm just looking at things and yeah, seeing how they're gonna evolve. Because if you believe in what politicians tell you, it's going to hurt you financially, I think.
Well, let's discuss the 17th BRICS summit that was recently held in Rio de Janeiro. This event that caused Trump to threaten to slap on those extra 100% tariffs on BRICS members. What are your thoughts on the continued advancement of BRICS and the potential for them to circumvent the US dollar in international trade? Did this summit accomplish anything meaningful in your view? Notably, both Putin and Xi were absent from the summit, but it does show that they are moving forward. I believe there was a number of agreements made, and they actually got work done. What are your thoughts?
I saw that Trump said, "Oh, no one showed up." I think he meant because Xi and Putin weren't there. But I think the reason Putin wasn't there is because they still have that arrest warrant, and I don't know what happened to Xi. But yeah, I think they're going to keep going along, and they're gonna. It's growing, BRICS. I didn't really see the the fine details of the summit, but I think one of the reasons Trump wasn't too happy is because they made a statement about countries bombing other countries. That shouldn't happen, and I think it happened. That was just after the U.S. bombed Iran. But I think. Yeah, these countries, the BRICS countries, they're going to start. Well, they're already using their own like payment systems, like alternative payment systems to SWIFT. They're already trading amongst themselves in their own currencies, and it's just common sense. It's like you and me. Uh, why why would you go to like an agent to book an interview with me? You just come to me directly. And that's what the US has been doing since World War II. They're like, they get a cut of every transaction. So I don't see BRICS going away anytime soon. And you're going to hear, of course, Trump and others saying, "Oh, it's over," because they're concerned. If they weren't concerned, they wouldn't be talking about it. They'd just ignore it.
Very true. I feel the same way about the Epstein files, but that's a whole other conversation.
Yeah,
I want to talk about the
I was thinking today. I told my wife, "What if Epstein is Satoshi Nakamoto?" Uh, because I think there was a story about him and Bitcoin some years ago that he was.
Okay, who knows? Maybe
Yeah,
he's the so those Bitcoin are lost forever now.
yeah,
Unfortunately, assuming he's dead, because
yeah.
that's another theory out there that he never died. Well, let's talk about the big beautiful bill for a moment here, because obviously it was sold to the American public as a 100% benefits for you. We're cutting taxes. All these great things are going to happen because of it. Trump signs it. I believe it was on the 4th of July, and the military planes flew overhead, and there was fireworks. It was just the most epic propaganda ever. But some detractors have pointed out that they estimate it's going to add $3 trillion to the debt burden, somewhere around there. So, what's the point of this whole thing? It seems like Trump campaigned on cutting spending. He had Doge come in, and they were going to cut government waste, and now it seems they're just going the complete opposite direction. What are your thoughts on this bill? Is it cause for concern? Is there anything to be optimistic about here?
Yeah, I even heard him saying he was asked by a reporter about this before he signed it, and they're still negotiating. And the reporter said, "Don't you think it's going to add to the deficit?" And he said, "No, to cut the deficit and the debt, we need to spend before that." Which that's what he's hoping will happen, that they'll borrow and spend so much that it will kickstart the economy. And I mean, historically, I've done a bit of studying about this, and it's never worked in the past. If countries could borrow and spend their way out of debt and out of fiscal difficulties, Zimbabwe, Brazil, Argentina, Lebanon, and others would be the richest countries in the world, and they're not. So I don't think it's going to work. Any upsides? Well, upside to it. I think, yeah, there will be upside to the people at the top 1%. They're going to rake it in because they have assets. But for the general public, that it's supposed to help the general public, I think they're going to suffer because even though Trump says the price of eggs has come down, uh, I think generally the cost of living is going to keep rising because the dollar is going to keep falling. And people sometimes don't understand that if your currency falls, that's actually that that's basically currency debasement. That's the consequence of inflation. And yeah, the big beautiful bill will uh, raise inflation because there's going to be more government spending. There will be tax cuts, but yeah, I'm not sure if it's going to pan out. And as well, I think the Fed will probably definitely cut rates aggressively next year, when, or even before, in case Mr. Powell resigns, and that will actually have the inverse effect that they want on long-term interest rates. I saw that Besant said that cutting rates would free up the mortgage market, but uh, mortgage rates have gone up since Powell cut rates last year. The Fed cut rates. The 10-year yield has gone up from 3.6 to 4.4. So I think it could actually backfire. So yeah, the big beautiful bill. I think it's. I mean, I would hope that it would work, but that would. Yeah, I don't see it working. The chance of it working is very small. And I think in a few years' time there will be another bigger and more beautiful bill, because it might in the beginning juice up the economy, but then the effect will. It's just like a drug addict; they keep taking their hits, and they become more and more immune to it. So they need more and more to get the effects. It's the same thing with debt, unfortunately.
Let's hone in on the UK for a moment and Chancellor of the Exchequer Rachel Reeves, after her debacle of breaking down in tears in the House of Commons like a child, while Keir Starmer was talking about how he wasn't too happy with the way the economy was going. We now have her going after pensioners' savings in a move you've called Rachel Reeves' great taking. What is this parasite of the political class up to?
Well, yeah, they call her Rachel Thieves as well. But yeah, I mean, I think when I spoke about that, it was to do with private pensions that they're trying to, like, basically mandate that pension fund managers put more of the like defined benefit pension schemes, company schemes, into private equity and riskier investments. And I think that's really dangerous when government dictates where your money should go. And that's why I said Rachel's great taking, and I think is really dangerous. Um, but funny you should ask about her today, because I just saw that they want to go after the state pensions as well. Uh, Not directly, but they want to lift the age at which you get your state pension. And I remember when I started working here in the UK in 1992, the the age for retirement was 65, but when I retire, it's going to be 67. So they've stolen already 2 years from me, and now they're saying that they might do it even more. So yes, the problem, Jesse, is that they, yeah, it's not just the Labour government, the previous government. They bailed out the whole of the city of London in 2008, and also they bailed out a lot of people who borrowed too much money and couldn't afford, bought houses they couldn't afford. But basically, that's what we're paying for. All that QE, all those bailouts, and unfortunately, they're not gonna like they're like turkeys. They're not going to vote for Christmas. They're desperate. They're going to keep taking as much as they can from the private sector, from the public as well, to make sure that they keep going, because we've got the same problem as the U.S. The debt is insurmountable. Excuse me, and the bond market also is in a bear market. We're going to continue to see yields rise in the UK. And I think Japan, of course, is one of the like canaries in the coal mine telling us that. So it's not going to get better. And I don't think it would get better even if we had a change of government. That's the way the UK is going. It's like a microcosm of the US, but I guess it's more blatantly socialist than the U.S., even though some people would argue, well, Trump is not a socialist, but you look at government spending, it's still above around 40% for both countries, maybe a little more in the UK.
And what do you think about Keir Starmer beating his chest along with the other three stooges, Merz and Macron, about sending troops into Ukraine and how Britain needs to be war ready and we need more spending for the military, we need more military recruitment? Is this all just a distraction to kind of make people believe that their economic problems are coming from a foreign land? Oh, it's because of Russia. We have to get ready for Russia. And so we need to focus on our military and making sure we protect our borders and all this sort of nonsense. Is this a big distraction? What's the point of it all?
Well, I think, yeah, it's partly a distraction. There's that old saying that war is the health of the state. And I think the state is lost all credibility, not just in the UK, but in the EU and even in the US. But yeah, aside from being a distraction, it could be uh, an excuse or something that helps keep this debt system going. Because if you scare people into thinking that we're going to be invaded by Putin, then you can justify increasing more, increasing government spending even more and creating jobs to produce arms. So because they've got nothing, yeah, they don't really want to do the right thing, which is tighten their belts, the government's belts, and cut the size of government and let the people keep more of their money and maybe grow organically. That they want to go down the route of military spending, which is more of an authoritarian way to do it. So that's how I see it.
Well, I'm seeing more and more of a breakdown in human decency and morality when it comes to the political class. We obviously just touched on Starmer, but we're also seeing the media and institutions become morally bankrupt. From the Trump administration working as hard as possible to protect elite child predators, police in Germany raiding homes and arresting citizens over social media posts, the EU openly interfering in elections in sovereign nations like Romania, and even threatening. I forget the guy's name, Thierry Breton or something. One of the EU guys threatening Germany. We did it in Romania. We'll do it in Germany if the AfD ever gets into a position where they're going to be in power. I mean, the list goes on, but the people in positions of power seem to now be brazenly corrupt, right out in the open. And nobody's. I think their attitude is, "What are you going to do about it?" It's become so. They're not even pretending to serve the citizens anymore. They're saying, "We're in it for us. We'll do what we want. What are you going to do?" How did we get here? And this is the gold bug's dream? We restore sound money. We go back to a gold standard or some sort of honest unit of accounting. Could such an event, were it to happen, is there a connection between this degradation in the leadership's moral compass and the fact that we're running everything on this debt-based Ponzi scheme?
Yeah, I think all the moral problems you're talking about, all the corruption, is a symptom of the fiat currency system and inflation. I think it was Alan Greenspan, of all people, who warned us back in 1966 with his essay, Golden Economic Freedom. He said that statists hate gold because it's a straitjacket on their activities. But as for sound money solving this problem, uh, as I said earlier, turkeys don't vote for Christmas, so politicians are not going to vote for sound money. The only way it will come back is that people like you and me keep informing and educating people about it. And then when the system does break down and everything collapses, hopefully, maybe uh, enough people will know about it and ask for it, the sound money. And why do I say hopefully, maybe? Well, because something even worse could come as a result of the collapse. Um, that's the way I see it. What do we do? Uh, I think we just try to be our own central banks, as Jim Sinclair used to say it, and have our own reserves of sound money and try to live honestly and truthfully, with ourselves and our neighbors and our families. And that's the only way to do it, I think.
Very well put, Mario. This has been a great conversation. Talk to us about the Innecco 64 YouTube channel.
Yeah, I mean, it's been going on for almost 10 years. It's the home of alternative economics and contrarian views. I mean, the philosophy of the channel is to try to question government and the banks, central banks, and provide an alternative to the Keynesian narrative that we've been following for so long. And the opposite of that, of course, is free market, sound money, small government, and the rule of law, more like the Austrian School of Economics. So, yeah, I cover what's happening in the markets, in the economy, day to day, and I try to look at it from an Austrian perspective. And I post content every day, basically.
Great. Well, I'll put a link in the description below to the Innecco 64 YouTube channel. I highly recommend everybody check it out. You do great work there. Thank you so much for coming on again, Mario. It's been a blast.
You're welcome, and thank you for having me.
Thank you for joining us today. This episode is sponsored by ARC Silver, Gold, Osmium. Take advantage of their specials. Silver Kangaroos 2023 1-ounce coins, only $2.47 over spot. Silver Maple Leafs 2025 1-ounce coins, only $2.87 over spot. While supplies last. Reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com. And make sure to tell him that Commodity Culture sent you. And be sure to pick up your official Commodity Culture t-shirt, hat, hoodie, or mug using the link in the description below, all backed by a 100% quality guarantee. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.